Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. So the question came up today on the VTF asking about rolling down when something isn't moving in my favor, or if you're sitting in a trade and it's not moving in your favor. Like how do I personally like approach rolling down? And I've definitely done videos talking about rolling up, which is what happens when something's moving in our favor, right? When things working, options are starting to gain value, or maybe they're moving into the money, right? Locking in, you're locking in money, rolling up, right? So taking off risk and rolling up, right? So I've done videos talking about that. I can't remember the last time I did a video talking about rolling down, or I call it like a dollar for dollar roll. And the question came up today, and I thought it was a good time to go over it. So silver, right? You can count me among the people that lost on silver this week. I thought once it broke out, I thought it was, I wasn't convinced it was going to go straight up and squeeze to the moon, but I thought once it broke out, it was going to stay broken out, and I thought it was going to maybe start to make progress into the 30s, right? So I got involved with March options, and actually when it reversed, I held, and then only today is when I exited. So basically, once it put in a lower low versus Tuesday, and then threatened to break below 20-day, that's when I exited. And you can see very clearly that it broke back underneath pennant resistance, put in a lower low, almost took underneath, almost traded underneath 20 days. So that was my cue to exit. Okay. For some people, maybe you got in a better price, or maybe it didn't hit your exit, so you're sticking with it, right? Now the issue is like when it broke out and the day was trading up into like the 27, 28 area. If you had purchased options that were further out of the money at the time, so say like in the 30s, now that's a very big move that you need, right? From like a point perspective, it's trading around 24, 24 and a half. 30s is now a lot more of a move than it was when it was trading around 28, right? So you may have plenty of time. You might have options through March, April, June, whatever, right? But if you have options that are with strikes up in like the 30s, you may say, okay, like this is now like turning into a long shot. I still think silver can work, but now my options are too aggressive, right? They're too far out of the money to maybe capitalize if it does move. So what a dollar for dollar roll would be is you exit or close out of the option. So this is how I consider, or how I approach dollar for dollar rolls, right? I would exit the options. So, hypothetically, say you bought $1,000 worth of call options, right? At like the 30 strike or 32 strike, right? So just hypothetically, this isn't what I was in, but hypothetically, if you bought $1,000 worth of the 32 strike call options, right? Stock reversed, or ETF reversed, they got hit really hard, and say now they're only worth 500, right? What I would do is exit the 32s and then take that 500, right? So you bought them for 1,000, they're only worth 500 total now. So you sell it, collect the 500, and then what I would do is look at $500 worth of closer to the money. So maybe that's like the 25 strike calls, maybe it's a 26 strike calls, maybe it's called spreads. But basically what I do is like I use the net debit, right, of what I sold the higher for to open contracts of the same dollar value that are closer to the money. Because then if it does make a run up to 28, 29, 30, then the lower contracts should start to gain value a lot quicker. You should be able to hopefully make your money back and then some, right? So that'll give you a better opportunity. And you're also not committing more capital to the trade, right? Because you sold for 500, then you bought $500 worth of lower options. Yeah, you might not have the same contract amount, but they'll be closer to the money. And if you only get a modest move to the high 20s now, whereas the other options were out of the money, these hopefully, if you do it right, should be in the money and help you make back what you lost, or maybe you make some on top of that, right? So that's what's considered a dollar for dollar roll. And it's like if you want to stick with it, but you think your contracts are too far out of the money, that's how I would look to approach it. All right. Um, cool. So still a lot going on in the market, and we got the jobs report. We got more earnings. So probably going to wrap up with a pretty busy day tomorrow. So I'm expecting some action. All right. So if you like this video and you're looking for more information on rolling options or trade management with options, please follow up with the link in the description of the video for more information on options and play. I hope you have a wonderful night. Stay well, and I will talk to you all tomorrow.